Hello, and welcome to Donut Investment. This analysis is for Taiwan Semiconductor Manufacturing Company on the New York Stock Exchange as of 31st of July 2026 with a share price of $405. The full report is on donutchen.ca. A half-size starter buy at $405, the world's dominant AI chip foundry on all three horizons: short buy, medium buy, long strong buy. It's only half a position, not a full one, because the stock sits below its $425 50-day line while the semiconductor tape is in a stated bear market. Add the second tranche on a $425 reclaim or a $385 bounce. The business is genuinely rare. It compounds at hyperscale rates while throwing off cash cow margins. Last quarter revenue grew 36% at a record 67.7% gross margin and around 40% return on equity, and 2026 guidance was raised above 40% growth. It sits on net cash with debt to equity of just 15/100ths and interest cover near 285 times. The one blemish is cash conversion. Record capital spending of $60 to $64 billion, an accelerated Arizona build-out, pulls the free cash flow yield down to about 1.8%. On forward earnings, the name is genuinely attractive, about 21 times, a price-earnings to growth ratio near 9/10, and analysts rate it a buy with a $596 consensus target, roughly 47% above the price. But that forward multiple front runs growth we've already haircut. On today's earnings, the trailing multiple is 28 to 30 times, right at our warranted 27.5 and the sector guardrail, with price to book near 10. Net valuation scores the top of fair, attractive if AI capex holds, full if it digests. Crucially, it is not expensive. The warranted ratio is 0.76, so the long horizon stays strong buy eligible. This is why the call is a half-size starter, not a full buy. Price at $405 is below the 20, 50 and 200-day averages that matter near term. The daily momentum is negative, and the whole semiconductor tape is in a stated bear market. The constructive tells are that the monthly and weekly trends are still confirmed uptrends. The daily momentum gauge has recovered off its lows to about 46, and the stock is holding the 385 shelf. Reward to the 475 base is about 17% against roughly 6% of risk to the 380 stop. A positive skew, but one that argues for scaling in rather than a full position today. The risks are real and deserve equal weight. First, the Taiwan-China geopolitical tail, a genuine two-way risk that's structural rather than a dated event. Second, an armed systemic tail in the macro backdrop, an index-level AI concentration or earnings quality unwind. TSMC's own earnings are clean, but that D-rating would drag the entire semiconductor cohort, already in a bear market, and it's exactly what the bear scenario prices in. And third, valuation. A trailing multiple of 28 to 30 times at 52-week highs, price to book near 10, and a free cash flow yield of only about 1.8% leave little cushion if AI capex pauses. The half position is the risk control. Now weigh the risk against the reward. The bull case is roughly 38% above today. The base case, the most likely, about 17%, and the bear case a fall of about 20%. So you are risking about 20 to make 38. So, our call on Taiwan Semiconductor Manufacturing Company on the New York Stock Exchange, buy. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donut Investment at donutchen.ca. The link to the full report is in the notes below. Have a great day.